tool that was designed for the future of humanity is now being used against it, right? And so I can flip onto Twitter and see people talking about MicroStrategy and the fact that it could get included in the S&P 500 if it were to adopt the FASB accounting standard, and that would send tons of money into the stock, and that would allow him to issue shares, and he would be buying Bitcoin. And everything is fantastic in the world, except nobody has yet articulated a use case for Bitcoin other than number go up. When I look at financial markets today, I don't see any of the order that I saw in prior generations, right? Where there was a lot of work around valuation, and there was a lot of work around trying to understand the underlying business models, et cetera. It just doesn't exist in the same way. Your objective with obtaining money is to remove the stresses associated with how do I obtain the things that I need in life, or those that I care about need in life, right? It's not to actually just get more money. And that is part of the nihilism that is going on.
Hi, everyone. I'm Maggie Lake, and today I'm talking markets, talking macro as well with Mike Green, portfolio manager and chief strategist at Simplify Asset Management. Hi, Mike. It's great to have the opportunity to catch up.
Oh, it's good to catch up, Maggie. I appreciate you inviting me on.
And there's an awful lot to catch up on. We're going to talk a little bit about Trump 2.0. I know you've been doing the rounds and talking to people about that. And I think we're kind of watching each day, getting a little bit more information about potential cabinet and, trying to figure out how to navigate this. But just start really broadly for me. I mean, what's top of mind for you as we sit here? We have a new president, a Fed that cut rates again this month. Stocks were near all-time highs. And now it looks like we've got some geopolitical tensions rising again with Ukraine and Russia as we sit here this morning. What are you really focused on? What keeps coming up to the top for you as really important?
Well, I mean, other than Thanksgiving dinner, which is also right around the corner. Listen, I think part of what is so interesting about what's going on is to watch my theories around the separation of fundamentals and market price tied to the passive components get more and more acceptance. And in a weird way, it's almost like watching nuclear weapons, right? A tool that was designed for the future of humanity is now being used against it, right? And so I can flip onto Twitter and see people talking about MicroStrategy and the fact that it could get included in the S&P 500 if it were to adopt the FASB accounting standard, and that would send tons of money into the stock, and that would allow him to issue shares, and he would be buying Bitcoin. And everything is fantastic in the world, except nobody has yet articulated a use case for Bitcoin other than number go up, right? So, it's fascinating to watch people adopt these theories and then begin to really percolate into the process at the same time that everything you just described about the fundamentals should be causing us to say, hey, wait a second, does it actually matter, right? Are we starting to cross over into the point where the malinvestment that gets created by this type of separation of fundamentals and information, the cultural components around it, the frustration coming from the left, the anger and frustration coming from the right, both parties are aggrieved in interesting ways. And, my hope was that there would be a degree of coming together in the aftermath of the election. We'd see it, and it just seems to have set off even more craziness, right? The left briefly retreated. Now California is talking about, how could we be the center of resistance to Trump policies? We don't even know what those Trump policies are, right? Some of the cabinet picks leave people scratching their heads. Some of the internal conflicts suggest that we could have another 4 years of chaos associated with the administration. We just don't know, right? We genuinely don't know. And so to see that up against all-time highs in valuations, et cetera, to me is one of the most concerning things that I can possibly be thinking about. And you just kind of have to set that to the side and say, this is going to do what it's going to do at this point, right? Nobody has actually stepped forward.
It's so hard. It's so hard to kind of swallow that idea. And you're right. You have been talking about this. I did an interview with D. Smith, who's just really concerned and, in a completely nonpartisan way. He just sees systems failing and nobody realizing that. It sort of seems that every turn I've talked to AI, I just talked to Jeffrey Hinton, who's talking about the dangers of AI. And it's like nobody's listening. No one's doing anything. There's no smart conversation or an attempt to, really address these things. Everyone just seems like they are in their tribal position, sort of, shooting at each other. And these big problems are just getting bigger. It's really fatalistic. It's really concerning that there doesn't seem to be any way to stop this. Does it feel like that to you? Because you've been talking about this passive investing bomb sitting here forever, but nothing changes.
Well, a lot has actually changed, and that's what's so, that for me is the positive. So I started talking about it really in 2016, 2017. So it's not quite forever, although it can feel that way in fund manager years.
Yeah.
And over that time period, we've seen more and more evidence, particularly the academic literature has mushroomed. And so we're getting more and more of an understanding of the mechanisms. And unfortunately, a lot of those confirm the theoretical frameworks that I had put together kind of 8 years ago, right? So I always have to be careful of the confirmation bias component associated with that. But I went out 8 years ago, and I think this, Raoul certainly knows this from discussions on Real Vision, like, my work was focused on traveling around the world and asking the smartest investors I could find, how am I wrong? Show me why this is a mistake. And nobody could do that then. Nobody can do it now. And so now it's really just a question of what are the ramifications of it, right? Is this, just yet another fear about, AI or global warming or something else that can be dismissed and we can treat it as if it's, relatively minor and, hey, what else are we going to do? Or are we going to actually seriously consider the ramifications of what ends up playing out in this? I'm starting to see both, right? Like, I see the degenerate crowd embracing it and like, hey, this is an opportunity to manipulate the system to get money, right? What are we going to do with that money? We're going to buy Bitcoin, right? Okay, fantastic, great.
Because that's going to make us more money.
And that's going to make us more money, right? And at no point in the process is anybody kind of slowing down and saying, hey, wait a second, what are we actually trying to do when we get this money stuff, right? And the entire point, and I've said this for many, many years, of money is to cancel obligations, right? Your objective with obtaining money is to remove the stresses associated with how do I obtain the things that I need in life, or that those that I care about need in life, right? It's not to actually just get more money. Right. And that is part of the nihilism that is going on. You referred to it effectively as, I forget the exact term that you used, but it was the equivalent of nihilism, right? You were basically saying, look, this is maybe not good. I would actually say it's slightly worse than that, because there's an odd belief that the entire system is, I think the technical term is fucked. And therefore you might as well throw more logs onto the fire, right?
It's like YOLO, like burn it down because it's so broken. And this is what D is I just talked to him about. He's very worried about that.
Well, that is unfortunately what really is the key fear that we have to have. And again, I've said for years, the key risk to the United States is from within the United States, right? If we can convince ourselves that there's nothing special here, that we are just as corrupt as everybody else, and ultimately, the system deserves to fail, whether that is because you approach it from the left standpoint and say, we offended countless Indian tribes in our conquest of the North American continent, or whether you're going to say that from the right side and say, it's a function of us having sinned in some way, shape, or form, and if we just fix the money, then the entire world will be fixed, right? But in the meantime, since we're not fixing the money, let's just burn everything else down, right? Like, it's a really, really unhealthy situation. And we've seen this play out countless times throughout history, right? People convince themselves it's effectively millennialism, the changing of a tide. We use that language, right? The fourth turning. Peter Thiel, who is absolutely brilliant, just did a podcast in which he was referring to the fact that the 20th century is finally over. I'm not sure I actually totally share that point of view. I understand what he means by that, but he's basically saying, look, we're turning a chapter, right? That I think is really hard to deny, right? We are watching an environment in which more and more of our activities are meaningfully separated from our consequences, right? I type something into Twitter, infuriating thousands of people around the globe. Not one of them can actually punch me in the face. Right.
So interesting.
It's a very different experience than standing up and saying the hateful things that we often say on Twitter to someone's face. Right. It's a very, very different type of behavior. We can talk about the dollar is collapsing. It's the end of the world. Kids can't buy homes, dogs and cats living in sin. It's, the entire, or being eaten. Like who knows what's happening to those poor dogs and cats? They're both sinning and being eaten, right? Actually, those two might be the same. But this is kind of this weird component where we're basically just saying, like, look, none of it actually matters. And if you go back throughout history, like where civilizations really break down, there's a great line that talks about, like what happened to ancient Sumer, right? Housewives stopped sweeping the steps, right? And dirt piles up and decay sets in, and that's how systems fail. And we seem to be embracing that.
We're not sweeping our steps, for sure.
We're definitely not sweeping our steps.
So I love that idea that there's no consequence for actions, that we're separated. That's a really profound observation across so many aspects of life. And I suppose that's the influence of technology, but there's something that seems like societal about that too. We've kind of like lost the anchor for morals when there is no consequence or something.
Well, what we've actually seen is a combination of factors, right? We are, there's the classic line, right? I think it's the book is called 9 Meals from Anarchy or something like that, right? It's basically saying if society is incapable of meeting the immediate subsistence needs of its members for a very short period of time, people begin to riot and begin to break things, right? In a weird way, we're so far separated from that, right? I can get in my car and put to work, 200 plus horsepower that's been sitting in front of my house with me, no obligation for me to groom it, feed it, care for it, etc., other than showing up at the local feed barn we call a gas station and occasionally pumping this fantastically cheap material into it, right? And I can drive that car to a place called McDonald's where they will give me, literally 3 days worth of food for roughly minimum wage in the state of California, right? We're just so far separated from anything that resembles, like, where did my food come from?
Mm-hmm.
How do I actually make sure that my children meet adequate nutrition tomorrow? Because on a stopgap basis, we don't care, right? Magically, I was on Reddit the other day reading some of the stuff, and I find it actually very interesting to go and read commentary from younger people to try to understand how their problems exist in their minds, right? And they literally are talking about how terrible it is that there are premiums associated with food being delivered from DoorDash, right? Now, there's a very easy solution to that. It's called a grocery store, and you go to it and you buy stuff and you make it, and that doesn't seem that hard. But if it's all you've ever known, right, that throughout college your parents gave you access to a credit card that allowed you to get DoorDash, and my kids certainly took advantage of that, sometimes more than they should have. Sometimes they were pretty responsible about it. But it's anytime I see that type of behavior, it's a flag for me that, like, my kids' lives are running out of control, that they're willing to pay a $10, $20, $30 premium to get food delivered to them as compared to go that little extra step of actually walking outside their apartment or their house to go get some food, right? These are all consequences that just occur when people don't actually have that kind of linear path, right? They put one foot in front of the other, and this is the path forward. For so much of this younger generation in particular. And it's understandable, because when I look at financial markets today, I don't see any of the order that I saw in prior generations, right? Where there was a lot of work around valuation, there was a lot of work around trying to understand the underlying business models, et cetera. It just doesn't exist in the same way. That loss of agency that creates, right? That feeling that, like, the entire system is basically just random chance. Manifests itself in gambling, manifests itself in rampant speculation. It manifests itself in this intense belief that this is the only chance, right? Like, this is a funny story for me. It's going to be terrifying for my 24-year-old when he hears that I've told it. But, when he was 6 years old, he had his first swim meet, right? And he dives off the blocks, and he hits the water, and his goggles fall off, right? And I don't know if you've ever seen a swim meet when little kids lose their goggles, right? They basically, like, doggy paddle the rest of the way. They really, really struggle. And he came out and he was crying and he's like, that was my one chance to like, and you're just sitting there and you're like, wait a second, dude, you're 6 years old. Like,
Yeah.
you've got all these chances ahead of you, right? But that's what it felt like to him. Like, this was my one chance, right? And
But
I just hear that over and over and over again out there, which is, like, we have no chance. We have to gamble. We have to
yeah.
do X. We have to do Y. You can't possibly imagine that you're going to succeed if you just slowly work your way through the process, saving on a continuous basis, et cetera, right? And I'll
And
be
you're not
honest,
criticizing that because you're saying the rules seem so, the
it feels
system seems
random.
so upside down. It's actually rational for them to think that.
It um I think this issue of rationality is actually a really important one to address, right, in that context, because rational and explainable are not necessarily the same thing, right? It is largely irrational to look at the world today. It has the highest standard of living versus any period in history, and all evidence is that it is getting better. And somehow or another believe that you only have one chance, right? Like, this is your only shot to get there, right? Now, is that explainable by the way that we've set up the system? Absolutely, right? People do feel, I went on for 15 minutes talking about this. People feel disempowered. People feel like they've lost agency in the process. It's part of what Donald Trump represented, was a reclaiming of agency from an amorphous party apparatus that, managed to put forward Kamala Harris without any apparent use of primary or anything else, right? These are all things that lead people to feel like they've lost agency in that process. So I think it's explainable, but I think it's
Not rational.
not rational necessarily.
I just had this conversation with my daughter who is newly at college. The same thing, a sort of a line of thinking that if this doesn't happen, all is lost, and
Yeah.
that's a very common theme, and it's, I think, just connected to some sense that it's very hard to navigate, and how can they possibly succeed, despite the fact that we are in a situation where the economy is very good. I mean, it makes sense, but it's so important. Do you think the answer is economic, or is it something more sort of societal, spiritual, moral? Where does the root of that problem? It's kind of a big question, but where does the root
No,
of
it's
that
a
problem?
huge question. And unfortunately, I think the answer is ultimately found in the historical cycles around this stuff, right? So if there's kind of one muse for the current era, I would argue that Milton Friedman is it, right? It is, it's not John Maynard Keynes. Keynesianism, it's terrible, right? It just leads to big government overreach, right? Roughly 50 years after Milton Friedman burst onto the stage, we're now fully embraced with this idea that we have a meritocracy, that the government inherently represents inefficiency, that any attempt at central planning or centralized direction is going to lead to loss of efficiency, et cetera. And the weird part about that, like, if you go back and I actually just wrote about this in my Substack. If you go back and you look at the arguments that led to Milton Friedman's success, right, one of the key components was that he appealed to both sides, even though he was arguing things that you could argue were completely absurd in a lot of ways, right? So he was a big proponent of ending the military draft, which had been in place for the longest period in U.S. history. It was basically a standing lottery that was continually feeding young people into Korea, first World War II, then Korea, then Vietnam, et cetera. And his argument behind it, right, that put him on the same side as the extreme left that was like, we just should stop having these wars, right, was that it was economically inefficient to have a draft, right? Now, do you think anyone on the left was really stopping and saying, well, okay, so let's really deeply understand this economic efficiency argument? No, they just heard famous economist says draft is bad, right? Okay, we've got an ally. That's great. So he's embraced on that front. He was embraced on the regulatory front in terms of the reduction of the inefficiency associated with the government attempting to enforce competition in markets, right? Bork went far further in that framework, but certainly they were allies in that process. And today we inhabit this weird world where people will honestly say things like, well, if you don't like the rules of Twitter, just start your own Twitter, right? Like, these are silly, right? These are actually silly arguments. We need to have, some form of discourse that says, once you've succeeded in our society, you take on a degree of responsibility to preserve that society or to
Mhm.
benefit that society, right? The noblesse oblige of prior generations. We have a new generation of aristocracy and extraordinary wealth. And I think the positive, if I'm interpreting this election, is that we're beginning to see them focus on, wait a second, let's start to give back, right? One of the great ironies coming out of this election is the frustration that individuals like Matt Stoller, who I'm very much aligned with on the corporate monopoly front, right, fighting back against what has become an intrusive corporatocracy, in my view. He is incredibly frustrated with the left. And his point is very straightforward, which is we have convinced ourselves that trying is bad, right? Trying to make things better is bad,
Mhm.
right? That's a big chunk of what you hear from the Bitcoiners, right? Burn it down, and then miraculously it will be reborn under the Bitcoin standard, right? There's nothing in life that is miraculously reborn. It requires extraordinary hard work. It requires an incredible amount of people coming together and making sacrifices on a unified basis. Now, how does this all come back to Milton Friedman at the draft, right? If you actually read the language of his arguments for the draft, it was economically inefficient because very wealthy people, right, should not be subjected to the draft because they are bearing a far higher tax than poor people. That was his argument. Right now, just stop and think about how that would go over if you were sitting down like at a Thanksgiving
Mm.
conversation, right? Rich people better than poor people,
Yeah.
terrible that we're imposing upon them. And by the way, we had that system. That was the system of bounties and claims in the Civil War, in which you could pay somebody to take your commission, right?
Mhm.
And to take your service. And everybody hated it. And it led to exactly what we're experiencing now, a time period of social unrest and frustration in which the forces of progressivism ultimately had to fight back against the forces of corporatism and oligarchy, right? So, like, we've been through this process before. We know how this plays out ultimately. We will see abuses on both sides. But it's uncertain. It's
Yeah.
really uncertain. Do we come back together again, or do we
Do
fracture?
you see, and it's easy to look back on history and with 2020 hindsight and sort of see the emerging thought leaders and people who helped steer a way out of it, and there always are those people. And it just feels like there's a deficit of that now when you look at the people who are quote unquote sort of leading it, whether it's on corporate or on the political side. But is that just because we're in the moment and it's hard to see? Do you feel like there is
I
a
think it's more. I think it's more a function of we're looking at the trees for the forest right
yeah.
now, right? So we're in the moment, and it's very hard to take that step back. I actually think there is some extraordinary work that's being done on the philosophical front. Right? Think about the long form podcast components. Think about
Hmm.
the opportunity to hear somebody like Peter Thiel speak in a measured and thoughtful manner. Um, there are You wouldn't have had that opportunity for a fireside chat with John D. Rockefeller, for example. It just
Right.
didn't exist, right? Um, so I actually think that we in some ways inhabit a incredibly rich environment, but it's not yet at a point that it's really crystallized around people deciding I'm going to follow X, right? Peter
Yeah.
Thiel is brilliant, but he is not a magnetic personality, right? He's not going to inspire people to die for him.
Hmm.
Donald Trump could be that person, right? Certainly seems to have inspired people to behave in certain ways.
Hmm.
Whether that moves that next step, I'm very skeptical, right?
Yeah,
I
well,
would
I'm
have a hard
skeptical
time.
of you have to be able to reach a lot of people, and I think that there's like a sort of firebrand attraction to certain people, but you've got to bring others who are not
Yeah,
naturally aligned with you
absolutely.
and make them say, "Oh, wait a minute, this is," which I
Well, I
don't.
mean that's part of what people, when you think about the singular big men of history, right? The Julius Caesars, et cetera. Right? They're such remarkable people in that they were both physical specimens. They were, leaders of men. People followed them almost blindly. Absolutely brilliant, right? You can't help but read Cicero's accounts of the campaigns in Gaul and just be like, oh my God, like this guy,
Like ahead
right?
of their time, really.
It was just way, way, way ahead of their time. True polymaths in all respects, right? It's that leader component that I would argue that we're still missing.
Yeah.
And I think part of, what you're seeing with some of the people that Trump is putting forward, whether Pete Hegseth is appropriate for the Department of Defense is one question, but he is absolutely that, exciting leader of men, judging by the reaction that I'm seeing from the military academies and the young people reacting to them, right? They are desperate, right? And as far as I'm concerned, he can't be much worse than Andrew Tate, right? So I'd much rather have, people looking at somebody like Pete Hegseth as compared to somebody like Andrew Tate for guidance. But, again, like this is what we're going through. We have this incredible uncertainty. What is the path going forward?
And so, this brings us to the current situation. So we've got, with Republicans now controlling Congress, expectations, I think, could not be higher. I mean, I'm reading stuff on Substack and on Twitter that is just like, this administration is going to solve it all. They're going to do it all. I mean, it almost, I can't believe that the amount of sort of, optimism. I'm happy that there's optimism, but it just worries me that it's inevitably, I don't think anybody can possibly do all the things that they're, that are now expected of them at the same time immediately, because we're all instant gratification. What advice would you give the Trump administration when it comes to prioritizing their economic goals?
Well, what I have said to the Trump administration is I think they did it backwards last time, right? They basically instituted policies that caused a mini boom in the 2016, 2017, even into 2018 time period. And by the time we rolled around to late 2019, early 2020, even in the absence of COVID, it was apparent that we were headed towards something that at least looked like a recession. Maybe it was another undeclared recession like the 2015, 2016, or what many people would argue happened in 22, 23. But we were definitely in that slowdown phase. And then, of course, COVID hit, and there was nothing you could really ultimately do about that, right? But we have continually seen this process of incumbents being voted out as those expectations of fixing all these problems without hard choices and some pain associated with it, right, fail to materialize. That's a failing of us as a voting populace, right? We actually know the answers to this, right? If it is very straightforward. Yes, we have a spending problem. Guess what? We knew we were going to have that spending problem 3 decades ago, right? Because we knew that the baby boomers were going to retire. And so, yes, the interest expense has accelerated some of this. But if you actually look at like the budget forecast from 2003, we're almost exactly in line with where
right. We've got huge entitlements, but we have people have the expectation now that they're going to come in and Elon and they're going to, slash the government by this huge amount. I mean, realistically, are they going to slash entitlements? If they don't do that in defense, then everyone's going to be upset, right? I mean, it seems like we're in this cycle of promises that can never be kept. No real conversations, no sort of realistic conversation with American people. And then everyone will just get thrown out in 2 years. That seems to be how the system works. Are you concerned that'll be a repeat?
I think that's accurate. And again, that's why people keep vacillating, right? They're basically saying, okay, we'll give you a chance to solve it. We'll give you a chance to solve it. We'll give you a chance to solve it, right? Your claims are fantastic, right? The larger your claims are, the more attention you get, the more people say, well, it's worth a shot.
Yeah.
Right? Again, we know what we have to do here. Right. We actually, unfortunately, have to raise taxes on wealthier individuals and corporations. Right.
Is that even close to being realistically possible?
Of course it is. It just requires senators and congresspeople to vote. Right. Now, what you're actually saying is it impossible for these people to actually vote for economic policies that will benefit us in the long term, but potentially cause some pain in the short term? you can argue that the incentive structure is not there, right? And I'll accede to that point. But there's also, like, that's the definition of hard choices, right?
Mhm.
Hard choices are things that do not provide me with an immediate material benefit. Choosing to exercise, choosing not to eat Twinkies, choosing not to do these, like, these are hard choices in the context of the absence of them.
Choosing to lose your seat by doing, even if it means you do the right thing.
Right. And we have countless numbers of, examples in history of politicians not only actually standing for what they believe and what they think is the right thing, but sacrificing their lives for it. Right. I mean, there's a reason why we, remember things like the Episcopalian Church and its resistance to Henry VIII and the encroachment of power that he was involved in. Right. Sir Thomas More, right? These are all things that we actually look back on history and we talk about people wanting their legacy, right? But man, I'm not sure what legacy actually means in an environment in which people broadly disparage anything that resembles legacy.
Yeah. It's interesting. I spoke to Michael Howell of Cross Border Capital just a couple weeks ago, and he warned that there's a wall of refinancing looming next year. And he's really worried about the ability to manage that by just issuing bills and shorter maturities, that sort of, magic that they've been doing in order to kind of at least postpone it. And one of the things he said, which was so interesting, is if he was going to talk to the Trump administration, he'd say, get in there, just blame it on everyone else, get a recession, get things under control, and sort of take the mantle of being responsible, and get that quick pain out of the way to kind of right the ship, because you've got the mandate to do something. And I sort of said, well, what are the chances of a politician ever doing that? Are we underestimating the next administration's ability to maybe tackle some of these tough problems?
I hope so, because that's exactly the advice that I've given as well, which is make the hard choices, take the pain, do what Reagan did, which is have a recession at the start of your first 4 years, right? And then you set yourself up for legacy, right?
Because he can't run again, too. So he's in a perfect position. Well, as things are now, he's not going to.
Exactly.
But
he's waiting for your hesitancy there.
I know. He's in a perfect position, though, to do bold things if he wants to.
Yeah, I mean, and again, this is the question, right? But what we don't know is whether our definition of legacy is his definition of legacy, right? There is a component in Trump that I think is a very realistic one, which ultimately says, is his definition of legacy ultimately changing the system to an autocratic one, right? So that Ivanka becomes the heir apparent as compared to J.D. Vance. Now, I think the risks of that are actually quite low, right? And I've had a number of interactions with very thoughtful people who are horrified by what they watch going on. And I try to remind them of the quote from Adam Smith in 1794, I think it was, talking about the United Kingdom, which had just lost its colonies in the United States, right? And his comment to somebody who was saying, "Oh my God, this is the end of the world, it's the end of everything," blah blah blah. He's like, "Look, there's a lot of ruin in a country, right?" And the point is pretty straightforward, which is there's always going to be inefficiencies, there's always going to be setbacks, there's always going to be constraints. But it's tackling those constraints that actually opens up the production possibilities frontier. And the constraint that we have right now is a system in which far too much of our society has truly unlimited resources, and as a result is not making allocation choices. They are effectively making, almost sybaritic choices, right? Like, what can I do to raise my enjoyment level even higher today, right? Gorging on.
Which is why people think the empire's it ruins, like you can sort of see the excesses.
Yeah, when you have legitimate discussions around lead poisoning in water in Detroit at the same time that effectively we're watching celebrities dine on peacock tongues, that is caustic to society, and it's particularly caustic when the mechanism of information exchange has shifted from, I heard a rumor that XYZ, and I'm going to tell the story of Tantalus, so that I can actually explain to people the consequences and how they'll be punished by God in the afterlife. right, to it being delivered to me over Instagram with zero awareness or filter and actually a celebration of this to young people who are like, well, that's clearly what our leaders are doing, right?
Yeah. Yeah. I think it's really right and important to kind of focus on young people because I mean this is going to be I don't know. It just feels like aside from being parents and being really concerned about it, it just feels like it's going to be so important as we move forward the sort of choices that they're going to
Well,
make.
you and I are somewhat similar. Like we've both been very fortunate, right? And I will acknowledge in almost any calculus, I consider myself a winner in the game of life. I've had a successful life, successful family, et cetera. My kids benefit from what I have achieved. Um, but I'm not in a position in which my children will never have to work, right? My
Mhm.
children actually work incredibly hard and they want to make their own successes, et cetera. But I have to look at the structure that is emerging around them to say, what are my responsibilities to them in that final stage of parenting to try to set up a system that allows not only them, but their friends to succeed,
Yeah.
friends and peers, right? And I agree with you. Like where we're focused as a society is all on the old,
Mhm.
right? I mean, there are no realistic discussions around how do policies impact on a forward-looking basis. What are sacrifices that are reasonable to demand? There was a fascinating piece I just read about a community in Japan that actually has achieved almost 3 times the level of reproductive, uh,
Success.
levels as Japan in total, right? So
Yeah.
they're like 2.7 versus I think Japan is currently running zero point 0.7, right, on fecundity. Um, and everything about these communities is about how do we integrate and how do we sacrifice in order to create and reward the opportunities of having young people, right? And so seniors are expected to volunteer in daycare centers
Yeah.
to help take care of children, right? Sports facilities and playing in the streets is encouraged, and people talking about how much they love the sound of children, et cetera, right? Um, in a lot of ways, like we have this nasty behavior in the United States, get off my lawn, kid, right?
Right.
That when we were young, you'd be playing in the street, the ball would go on the neighbor's lawn who spent way too much time making sure their lawn was perfect, and you'd sit there debating like, do I dare step onto the lawn to get that ball? But at least that was the minority, right?
Yeah.
And
Yeah, it
today
was the one person in the
it was
neighborhood.
the one person, and
By the
now
way,
it's the homeowners
there are a
association.
lot of old people who are completely miserable and isolated and alone too. So, like, the
Yep.
system's not really working for them either. That's the
No, it's
crazy
really not.
thing because, I'm sandwiched between aging parents and young kids, and there has
Which
to
is
be a
what
way
they call
forward.
our generation. We're both
Yeah.
Gen Xers, right? We're called the
Yeah.
sandwich generation.
Yeah, and stressed, they call us that too because
Yeah.
of that. But I wanna come back to crypto because I think a lot of young people are looking at this, and this is an opportunity. This is something as a way they see to grow their wealth. You It sounds like we kind of grouped that into what's not working or what's sort of this sort of part of the broken system. And I talk to a lot of people in that who see that as not burn it down, this is going to replace everything, but they're suffering under what they kind of refer to as the tyranny of intermediaries, right? The sort of these few platforms control everything. You make no money, you lose your whole identity there. And it's a way to kind of reclaim some power back. So while the casino of trading crypto may not be the answer, there is some utility and promise in the technology behind it. Do you make a separation, or are you concerned the whole ecosystem of crypto is built on something, a false promise?
Well, I think it really depends on what you mean by that, right? So I've always embraced this idea of digitally native securities, right? I think it is actually one of the key problems that we do have right now. Is just that so much of the system is built on legacy technology. And I've used the examples, I've spoken about this very clearly, right? So if I want to do a residential mortgage backed security, if I want to construct the securitized product that involves mortgages from thousands and thousands of individuals that have been pooled together so that it behaves with a certain statistical regularity, the regulatory framework requires me on average to hold about 3 million pieces of paper, right? And for those who have not seen what 3 million pieces of paper look like, it's a lot, right? That's boxes and boxes and boxes, right? Um, None of which is really readily searchable. None of it is truly digital in its form. I have to go in and confirm that it is an actual wet signature on a mortgage, et cetera, et cetera. Like this just, it's so inherently inefficient. And it does raise the costs of accessing things like mortgage credit, right? So digitally native securities would solve portions of that, right? They would raise their own issues around, how easily it would be to conduct fraud. I didn't sign that. Yes, you did. Here's the signature, blah, 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 right? All those things, I think, are in our future and are incredibly exciting, right? Same thing with medical healthcare records, right? Like we currently artificially restrict the availability of the information because we're concerned with the privacy components of it. It's actually remarkably easy to turn that data into useful information, right? That can be used for improving health outcomes through digital securities, things like blockchain, et cetera, that can actually strip the data from its identifiers, et cetera, right? So all of this is actually very promising and very, very positive. And that's kind of where it stops, because every giant meme has to have a kernel of truth to it at the center, right? And so there is truth to this digital security component. The meme coins themselves are effectively just trying to compete for those platforms, right? So Solana could be argued as a competitor to Visa, right? And if you want to present it that way, that's totally fine. Absolutely. The utility tokens associated with many of those things could be useful in terms of paying people for the transmission and verification of data and all that sort of stuff. But the idea that these coins have speculative value, that they are an end in and of themselves, that somehow, like gold, right, they are a store of value, as I've talked about repeatedly, like that's actually just misunderstanding gold, right? And so, it's kind of fiction on top of fiction, in which there's a little kernel of truth at each step in the process. But by the time we get to where we are today, it's just been so totally corrupted that it's actually quite negative in its societal implications. By the way, it's not just me who's saying this now. Others have finally run the simulations that I encourage people to do. It's one of the wonderful things about something like Bitcoin, right? Because you know the rules, you can actually run a simulation of Bitcoin over the next 140 years, right? To get to the point of full issuance, et cetera. And what you will discover is that this is a system that ultimately collapses upon itself. Right? Now, can you insert external energy in the form of an ETF to prop it up? Absolutely. You can attract new entrants in. Can you convince a government to make a mistake and ultimately adopt it as a strategic reserve, right? Injecting energy into the system that forestalls that eventual collapse. Of course you can, right? But why? Why would you actually want to do that unless your objective is to prop up the coin as compared to fulfill the system, right? The dirty little secret about the Visa network as it relates to Solana is nobody actually has to inject energy in that. In fact, that system is harvesting energy. It's living off of the frictional components in which people say, I want to do these transactions and I want to do them as cheaply and effectively as possible. And so I need to turn to this network that allows me to do that so that everybody can basically participate in it in a trusted framework. And I'm going to pay this rent to that network, right? Which we call the Visa network, right? And that rent is increasingly obscene. And so people are correctly pointing to that and saying, like, that's an opportunity to make things more efficient. Sure. By 1%, 2%, right? I mean, we're going to cut cost of transaction by a tiny component. What are we going to do? We're going to radically increase our transactions. If we do that, does each incremental transaction offer the same value that it did before? Of course not, because the costs have fallen so far. I'm doing more and more marginal transactions, right? It's a little bit like Zeno's limit, right? Or Zeno's paradox. You effectively just get to the point where, like, yeah, I can keep dividing it and doing more and more, but I'm not really improving efficiency all that much.
It's an interesting way to think about it as a network with, with energy inputs. We're going to go around to a couple other, while we still have a little time, just to hit on a couple other points. So you tweeted this morning that the market is increasingly evident that the market is broken.
Yeah.
And I think this relates to this, these passive flows that, as you've said, just put this relentless bid in indiscriminately under some of the biggest cap stocks. You're an active manager, right? Can active managers even compete in this kind of environment?
Well, they can, but they have to cheat, right? And so this is part of the discussion that I have with others who are doing work on this stuff. I've shared charts that show this component, but I'll put it in for the audience so they can actually see this here. Just give me 1 second to pull up.
And as you're doing that, I also want to know, like, since we've been focusing on young people, I mean, you're or soon to be in the workforce or just beginning to be in the workforce, because, we just talked about some of the problems with Bitcoin. Stocks are broken, bonds are volatile, and a lot of people worried about bond vigilantes. I don't know if you are. It kind of leaves people thinking, where do I go? What am I supposed to do in this environment? Which I think is a legitimate question. I get that question from audience members all the time. Am I supposed to be like Buffett and raise cash? Like, what are my options here?
Well, I would argue that Buffett is actually giving you a very strong signal, right? Whether people want to listen to Buffett, they didn't in 1998, 1999. He wrote famously a letter in Fortune magazine, an opinion piece in Fortune magazine in December 1999, saying, "Look, this is a bubble, and it's unlikely to end well." What was fascinating about it, in part, was almost all of his arguments for why were wrong, right? But the net impact was the same. What we're experiencing right now is a confidence component, and it's when we talk about passive flows, I just want to emphasize, like, it's not actually that passive flows themselves are the problem. What you're really ultimately looking at when you talk about passive flows is all flows impact markets. It's just a question of what is the genesis and meaning behind the flows. Why are they occurring? And so the theories of the efficient market hypothesis, the theories under which we believe that equity markets and fixed income markets are constructed, are largely predicated on this idea of information flow. Information is released, right? That the market prices change to incorporate that by effectively discounting that to reflect what the future cash flows are going to look like based on that information that's coming in, right? That's the theory of the efficient market, or the information theory of markets, right? But that's not actually what's happening now, because increasingly there's a source of flows in the form of 401ks, retirement assets, money flowing in systematic process that is simply going in to transact because there's money, right? Famously, nothing I do is famous, but to the extent I describe the systematic process, it's passive is simply, did you give me cash? If so, then buy. Did you ask for cash? If so, then sell. Now, the reason why that becomes really important is if it turns out that markets are not as elastic, capable of absorbing flows as people have historically thought they are, and the evidence is that they are fantastically less elastic, much less capable of absorbing flows than people think, and that actually gets worse and worse with more passive penetration, right? It means that all of these things change. And so, just a couple of quick charts from a presentation that I share all the time. Okay. So this chart here very quickly just describes, when I surveyed active managers, I asked them a really simple question. You're a portfolio manager, you have 5% cash in your portfolio, you receive a new inflow or outflow. This is a catalyst to making a change in your portfolio. How do you react to valuations, right? And the answers were that they go from, if valuations are super low, there's no way I'm selling, and almost 100% chance I'm buying, to evaluations are ridiculously high, there's almost no chance I'm buying, and almost 100% chance I'm selling, right?
Yeah.
Now, that shouldn't surprise most people, but what was really surprising in the output was this intersection between the two at almost exactly 50-50, at almost exactly the market's historical valuation average.
Yeah.
If you simulate the system, if I construct agents, right, and allow them to trade with each other, what this system produces is mean reversion. This is what we've had historically in markets. If, on the other hand, I got to do a better job of navigating charts here. Okay, so now if I introduce passive, though, remember that passive, if you give me cash, if so, then buy. If you ask for cash, if so, then sell. Did I talk about valuation?
Yeah, there's no intellectual component to this at all.
No component of it whatsoever. So it's simply a flow, right? What that ends up doing is it changes the structure of the market away from that mean reversion, where people were basically saying, if prices go higher, all else equal, that's bad. If prices go lower, all else equal, that's good for forward investment returns, right? Passive takes that away. And if I simply feed that same model now with a growing proportion of investors who invest simply on this basis of, did you give me cash? If so, then buy. Did you ask for cash? If so, then sell. You get a mean expansionary market that looks exactly like what we're actually experiencing.
So how do you and this eventually, I'm assuming this eventually blows somehow. I mean, this eventually.
Yeah, so this is a lot of the work that I'm working on now. Like the quick answer is, it doesn't blow until you actually start seeing a decline in growth in passive.
Which could potentially be demographic, right?
Which can be demographic, it could be recession related, it could be policy related, et cetera, right? Where it gets really ugly, and I'm not ready to share a few of the charts on this, but this is what I've been working on recently, is how this process reverses. And I'll just lay it out very simply. Like if we were to stop the growth of passive right now at what I think is about 45%, we'd have, give or take, 10 to 15 years of zero to negative returns as valuation factors, quote unquote, normalized in the presence of growth. It's debatable how bad that would be, because the growth itself would be impinged by the underperformance in the equity markets, which would reduce consumption versus expectations, et cetera, et cetera. But like, it's solvable, right? If we continue on for kind of another 5 years, my models show that we actually have hollowed out the system of active managers at that point to such an extent that when passive tries to sell, the system crashes 1929.
Because there's no one there to. So when you say stop the flow of passive, does that mean just push more of that to active as opposed to just less flows into stocks? Because we all have to fund our own retirement, right? So we've got to be investing, or at least that's what we were told.
Yeah. So, well, the answer to that is yes, right? You do need to save for retirement. You do need to try to do that. There's two separate issues. One is this weird belief that the only place for you to save is in the S&P 500 or in US public equities, right? Like, that's silly. There's lots of things I can do to save. We have countless examples of individuals who have saved in their local community by building real estate, making investments, constructing a community that they're part of that rewards them going forward, right? And they can do that in a very moral and ethical way, contributing to their local community. We see people who do that by contributing to their children's education and trying to help their children be superlative individuals who will help them in their retirement. That's the historical model, right? Like, these are all separate things we can do. And so the destination of the S&P 500 or the destination of public equity markets, that's a policy choice, right? And it's actually, that's one of the things I try to emphasize for people, is that policy choice is actually ingrained in our legal framework now through what's called qualified default investment alternatives. They create huge incentives for both tax purposes and for liability avoidance for corporations to guide people into the S&P 500 or equivalent type products for their retirement savings. All that's fine until everybody ends up doing it, and then we end up experiencing these.
So it's almost like not enough diversification. Just because it was easy and people were going to have to fund their own retirements, this was the easiest way to do it, the most sort of efficient for, and because it's on corporations to provide that in some way.
Correct.
Easy enough to just fund them in there. It was cheap. It helped with liability, and so boom, we just are not diversified enough.
Correct. And that's exactly what we're seeing, right? And so what is the implication of this? Now, the world is not diversified enough, because U.S. equity market capitalization now makes up 65% of global equity market cap, right? Up from 35% 20 years ago. So like, we've gotten to the point where more and more and more of the system is levered and focused on a narrower and narrower slice of outcomes that have become, quote unquote, too big to fail. And as a result, all of our policy choices are basically around propping up the system, which just further exacerbates the stasis that we started out our complaints about.
So it sounds like certainly we need a policy remedy. If they're from an individual level, I get people all the time asking, like, how can I diversify? Like, I sense that I want some diversification. How can I actually go about doing that? From an individual level, it's sometimes hard to know. Some of the things that people talk about are not accessible to individual investors unless you're very high net worth.
Yeah, even within that high net worth, I want to always be careful, right? Remember that high net worth is basically saying that you are in caveat emptor space, right? Access to a hedge fund is not a ticket to wealth. Access to hedge funds is typically a a path to exclusivity far more than it is actually wealth, right? There, for every Stan Druckenmiller out there, there's a Mike Green. So all of those things I think are actually really important for people to just understand, that like the system is not set up to try to screw you by preventing you to have access to hedge funds or private equity or private credit. What you're actually hearing, this language of democratize everything and give people access to private credit or give them access to private equity. I'm well known for putting out, why are you reading this now, right? The reason you're seeing the push for private equity into 401ks is because private equity can't sell to anyone else.
Yes.
Right. And
yes.
so, just like
beware,
recognize this is not in your interest.
Yeah.
The answer if your debate is like, do I invest in my local community? Do I invest in the S&P 500? If your next question is, do I invest in a levered partnership that is extracting value from companies on the basis of financial engineering? Like, come on, like this is silly.
Yeah. You've got to at least understand what you're a little bit what you're getting involved in. So as we wrap up, Mike, the one last thing I wanted to ask you about, and this is another concern that comes up a lot, is this idea of rates and volatility. We know there's been a lot of bond volatility, Treasury volatility in the way there wasn't before. We saw the MOVE index go up. I know Harley Bassman's part of your company, a colleague of yours. People are nervous, and I've had people sort of wondering aloud if we're not returning to a time of bond vigilantes. They're worried about inflation with some of the policies of the Trump administration, and wondering if we don't see a period where no matter what the Fed does, bondholders say, well, you need to pay me more for the risk I see, both with deficits and this wall of issuance that's coming, and with the risk of inflation. Do you worry about treasuries here, or the return of some sort of bond vigilante?
So one, I don't think there ever were bond vigilantes, right? Remember that at its core, all a treasury is a promise to return dollars at some point in the future with some additional compensation associated with it. All Apple or Microsoft is a promise to return what dollars they earn in some form or another, right? In the exact same framework. To think from a societal framework that the claims generated by Apple or Microsoft or Nvidia or MicroStrategy are going to be treated as senior to the claims of the US government and its ability to meet those obligations is absolutely absurd, right? And so, what I would argue is going on right now in terms of the bond vigilantes is that you have the largest marginal buyer who has no concept of value. And by that, I mean things like target date funds or passive indices, passive allocation frameworks. When you have a systematic allocation framework that says, I'm going to own 60-40 bonds and equities, right? Or I'm going to own, in the case of target date funds, it turns out to be a weighted average about 75-25 over the life of it, much less bonds early, much more bonds later, right? Nowhere in that process is there a discussion of value, right? Coupons could be 20%. How much should I own? Well, you should own the same amount as if they were zero, right? And so when I see things like that, I recognize that what's really actually going on is the same thing I was showing you elsewhere. There is not a language of value. There is not a language that says I should increase my allocations to bonds. And because that language doesn't exist for the marginal player, the implications are suddenly that, well, prices seem to be moving in a way that is unfavorable to me, right? That, maybe the market knows something.
Mm-hmm.
I don't think that's true. I actually think the risks are much more deflationary than they are inflationary. And there's a couple of reasons why. I'll just lay out the most simple ones. We are entering a world in which the growth of global population, which is ultimately what drives consumption of many of the base components, right? Like how much food we need, et cetera, is largely a function of population. That's slowing dramatically, right? Commodity prices, people will point to inflation. They're like, oh, commodity prices are going crazy. Look at cocoa prices, right? Well, look at grain prices. Grain prices are the lowest that they've ever been, right? lumber has recently rebounded a little bit. Well, sure, after we shut down any number of lumber facilities because we don't actually, mills because we don't actually need it. But there's tons of timber out there, right? Second growth forests are now coating North America in a manner that we haven't seen for 100 years, so 200 years. So the idea that scarcity is what inhabits our future, I think, is deeply, deeply misleading. Right? If anything, it goes back to the conversations that we started with. We are cursed with affluence. We don't have to make hard choices, right? And as a result, really easy choices. Do I have steak or chicken for dinner tonight? Right? Like those are actually, those are the conflicts that we encounter. Right? Am I going to substitute ground beef? Like, I mean, come on. Think about the movie Raising Arizona, right? When there were no crawdads, we ate sand. You ate sand, we ate sand. Right? Come on, those are hard choices. Steak and chicken, not a hard choice.
Mm.
The second question, though, in terms of like an inflationary environment, et cetera, again, boils down to the discussion of, well, what do you actually mean by inflationary? And so if I look around the world today and I look at the inflationary pressures, almost all of them are down, except for situations in which I can point to the existence of corporate monopolies that by definition, right, this is their practice. They underproduce in order to maximize profitability as compared to producing to the point where marginal returns equals marginal cost. Right? They produce to average total to minimize average total cost. That engenders a mindset of scarcity. It engenders a mindset that people say, well, if I don't get it now, I'm never going to get it. Right? And I just don't think that's true. If anything, I look at all the innovations that are occurring, and it really boils down to how do we choose to allocate the surplus that is increasingly being generated. We are a wealthier society. We are a wealthier people than we have ever been in history. Our life expectancies are near the highest in history. Obesity in the United States fell for the first time in history last year, right? That's an impact of technological innovation. But it brings up something I wrote about in my Substack. If you had gone back and you'd looked at the tuberculosis epidemics in the early parts of the 20th century, you would have made projections that tuberculosis spending would occupy somewhere around 60% of GDP by today, right? We spent $4 billion on tuberculosis last year. Doesn't even show up in our spending numbers, right? And that is the future for us if we allow ourselves to seize it, right? And so I just don't worry about these things. What I worry about is the incoherence and the anger and the frustration that leads to short-sighted decision-making that in turn cuts off those avenues.
I think this was such an important conversation because it is a mindset, and
It is.
we need to focus on what's important and not sort of get sucked into the gaslighting that's happening around all the things that are not important. And I think that happens all the time because of the nature of information and media and everything else. And so I think this was really great to kind of focus our mind on what's important and sort of bust some of those myths and narratives that are out there. Mike, you always make us think when we get together. I so appreciate your time.
Well, it's always a pleasure to chat with you, Maggie. Thank you for having me.
Great stuff. Thanks.